Hello, everybody. Happy Sunday to you. It's my birthday and doing what I love, talking about the markets. So here we go. We're going to start with our PowerPoint first. So let's share our screen. Just put this together today. So our word of the day is cavil, making petty or unnecessary objections. My father likes to cavil with contractors about minor issues. So there we are to add to our vocabulary today. And let's go next. This is the diamonds. It looks like we got a bullish candle coming out here, slightly engulfing. So we got increased volume. So we think this is going to go up. AJ Monty believes this is going to go to 392.05. So quickly move into IWM. Looks like we got a not completely engulfing, but it's going a little higher and a little lower volume. So the target is 197.41 on. So I think there's possibly slight pullback on IWM. Two-part prognostication on QQQ. I think it's going to, volume is receding a little bit, but it is moving up slightly. So we think it's going to go to 448.21 and then pull back to 441.85. Onto the S&P 500. Here we go. The S&P got a engulfing. I think this is going to go to 498.67. Volume is backing off here. I'm not sure what's going on where the screen is paused. Let's start. Let's see if we can share the screen again. So there we are. Next, we're going to move on to Bitcoin. We'll look at the VIX a little later, but this is Bitcoin. The possibility of this is a Fibonacci retracement lines from the breakout. Feel it could pull back to around 57 on a 50% pullback or retracement. We'll see if that happens. And now on to Business Insider. Hard landing recession is a guarantee as full impact of Fed rate hikes have yet to hit the economy, Morgan Stanley's chief economist says. So watch out below. And also in this, a crash is coming. So this is using the Fibonacci retracement lines of 50% pullback would pull back to the 2020 lows. Generally, a big pullback, this is in Dow Jones, happens every 8 years. And happened here, 54% drop in 2008, 38% drop in 2000, and not as bad, but a significant drop here, 38% drop here, and here, and the drops are happening more frequently. So I doubt if it would come now in an election year, but watch out over the next 2 years and be careful. Tune in to us and we'll keep you abreast what's going on with the markets. In China, they freeze the accounts of quant funds after it dumped stocks. This is a way to stop the market from falling. On to Peter Schiff. He says a booming stock market mirrors dot-com bubble. Well, we know the dot-com bubble kind of went on for a while, 98, 99, before it hit in 2000. So that's why we're suggesting it's about could be in the next 2 years. Here is a delinquency rate for multifamily housing higher than the GFC. Look at this. This started in 2008 and it just kept happening over the next 2 years. And GFC is a great financial crisis. We go, and then this is the producer price index by industry, the plastics and material and resin manufacturer. And look at this. This is just trending higher for inflation. See this line here was resistance, broke through the resistance, and just like any chart in the markets, now this line is providing support. So it should bounce off of here and probably move higher. So inflation has not been licked yet. Now we watched a seminar earlier. This is the Lifecyle trade, how to win at trading IPOs and super growth stocks. The authors are Eve Wobot, Kathy Donnelly, and Eric Kroll. And I guess Kurt Dale also. So Eric Kroll was on a webinar with Investors Business Daily. So setting expectations, about 33% of follow-through days. Let's see if we can find a follow-through day. Let's just quickly show what a follow-through day is. Happened in November 2023. I guess this is not gonna work. They changed the name to Market Surge from Market Smith. So let me just log into that. So we got the S&P 500. Okay, let me stop the share and share the screen so everybody can kind of see what's going on. This is the S&P 500. If we could just draw this line. See right here, S&P 500 broke out on a follow-through day. Or broke out here, then pulled back, and I guess this would be a follow-through day here, right here. No, it was in November, the follow-through day, so yeah, it was the 10th of November. So this is the follow-through day here. And then it gapped up after that and has continued much higher. So that is that. And let's take a look at the NASDAQ. Same thing. Follow through day on November 10th. Interesting, had a pullback right over here, and then it broke out the next day. So that is a follow-through day. Just know what we're talking about. On a follow-through day, it's suggested that you buy something. Don't put all your money in the basket, but buy something to test it. 33% of follow-through days produce rallies where you can make money. An additional 41% produce rallies with small losses or gains. Some people call this, in the book, they call this slogs. And give enough time to make a safe exit. Conclusion, follow-through days are a good buy signal to follow, but money management is the key. So this is, take a look at it. Whipsaws usually happen 15 days after a follow-through day. Gain or loss doesn't really matter. Small losses or gains of 15 days or less, it looks like. And plus, could be plus or minus 3%. Money makers, 15 days, 3% gain, 3 to 15% gain. And life changers, then in 15 days, gain be greater than 15%. So there we go. Here's a pie chart showing distribution of rally types after a follow-through day. Whipsaws are 26.5%. Small losses or gains are 41.3%. Money makers are just about 26%. And life changers looks like 6.3%. How the market has reacted after 11/1/2023. I guess he said November 1st. I was looking at November 10th. That would have been the breakout. Average percentage change fall through day closing price by rally type. Whipsaws down 3.4%. Slog, small loss or gain, 2.2%. Money makers, it's kind of hard to read that, 6.4%. Life changers, 9.9%. And that's about where the follow-through day has come. How rallies act in the first 25 days after a follow-through day. So there's 3.4% whipsaws, small losses or gains, slogs 2.7%, money makers 6.4%, and 9.9%. This is the average change of the stock price after a follow-through day. After a follow-through day, what happens in the first 20 to 25 trading days matters. First 25 days of accumulation, whipsaws happen in 1.4 days. Small losses or gains happen in 5.5 days. Money makers 7.3, and life changers 8. Subsequent follow-through days up 0.3, small losses 1.1. So subsequent follow-through days and accumulation days are good. Why is that? Because it's showing that there's more strength, more people are confident to buy coming into the market if there's other follow-through days after the initial follow-through day. Average index gain after 25 days, 3.4% loss on whipsaws, 2.2% gain on slugs, money makers 6.4%, life changers almost 10%. Professional distribution, what is that? Well, that's when professionals start to sell. And you can see that on the chart. A professional distribution date within the first 3 days after a follow-through day leads to 77% of these rallies being whipsaws or slogs. So that's what you want to watch for after a follow-through day, are professionals selling into it. Now, this is how you handle Mount Everest in a stock. This is super microcomputer. It breaks out here. You put in a trailing stop to protect what you've won. And you keep moving up the trailing stop as it goes up the ladder. And when it comes crashing down, this is when you've sold, the sell has been triggered, and you pocket the money. You don't want to have a winner turn into a loser because you didn't have a trailing stop. And here's an Everest signal with a trailing stop with arm. It broke out over here. The trailing stop continues up, 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 and here's where it sold, and you pocketed your money. Here's another. So this is where you could have gotten in. Looks like we got a breakout here, going above the 50-day moving average, and then you'd be set to lift off for a current, what we call a high. Both of these companies are high tide flags. This is a flagpole, and then this is a fabric waving in the wind. So that's our PowerPoint for today. Let's go take a look what happened with the market. Let's go to our screens. First, let's look at our dollar index. Dollar index dived on Friday. So that means silver must have popped. Got a gap up. Silver has popped up. Look at that huge move. Look at that volume. Reverse correlation from what the dollar has done. I would imagine gold has done something similar. There we go. If you had bought over here on this move up and held, this is a pocket pivot. It pivots out of this little pocket and continues moving up on massive volume. Let's look at our copper. Is now definitely has broken out. It's bouncing above the 200-day. Now, if the dollar comes back strong, can't guarantee it'll stay above there. But as I've been saying, on any strong pullback, that's where to buy these. Southern Copper. Tried to move up and sold off. Yeah, their earnings came out. It was negative 50%. And it looks like it really gapped down on that news. Freeport McMoran pulling back. Tried to move higher and pulled back. And then we got Vale. Looks like we got a little bounce off of the 10-day moving average. Rio definitely bouncing. This possibly could be you could try a buy here and just see how it moves. And finally, our Australian miner Got a pretty strong move over here. Clears the 10-day moving average. We've got 2 days right here that it could move lower. What we call pink rally days. That's kind of the sign right there. I would have put on a little bit just to kind of test that. So that's the dollar. Let's look at our bond yields. Bond yields, much like the dollar, dived, fell to the 200-day moving average. This is going to really help small caps out, and I believe they rallied. Everything in the market rallied, so that's probably a good reason why. The 20-year yield dives as well, down to 3.3%. Our VIX has yet to fill in the gap. It's 1301 right here. That's where we're looking for the VIX to go, and then to move up. And then we got this other gap up here. It's right around 1458 to the 15. So I guess 1518 is where we're looking for it to move. So looking for it's an oscillating index. So 99.95%, 99.95% of the time, it'll fill those gaps. So let's go to Dow Jones. We just had our kind of our forecast, higher volume, and it's bouncing off the 10-day moving average. We're looking for this to go higher. Doing this IWM. Moved higher, but the volume really backed off here. So I think a lot of that's going to depend on what the yield does next week. It's up 1.06%. It did break out there. So it's kind of looking for the first breakout and move higher on 2.5 years on small caps. So we'll just see. S&P 500 moved higher on lower volume. So we'll see if that continues next week. We're looking for a pullback to 498. RSP, equal weight, looks like pretty close to the same volume as the day before. So you can flip a coin whether it's going to go higher on Monday or not. Up 0.7%. NASDAQ volume is higher. So I think it's going to go higher next week. Up 1.51% on Friday. So that is a look at the indexes. Take a look at leading ETFs. We got a pause in the financial spider, communications. It's moving higher, but it's on lower volume, up 0.83%. Real estate, I would think it would really pop with the bond yields coming off, pops off of the 10 and 20-day moving average. Volume was a little lower, but it's up 1.1%. And look at our utilities. Utilities gap down and fought to get back to where it was. Looks like, look at energy. We've got a gap up in energy, up 1.16%. Take a look at oil. Gap up near the low. Look at our U triple hedge oil trade. It did finally move over 30 and hold there. So we'll just have to wait and see what it does next week. And take a look at our biotech. Wow, sold off and it really rallied. Same with this biotech. There's one that I wanted to take a look at. It looks like a high tide flag. Building materials, we're just going to run through these. Building materials are up. Volume is a little lower, up 0.46%. Infrastructure, it's just going to look for, let me try to find, move this up a little bit. My list in the biotech area is a high tide flag. Wanted to look at, put this in our high growth, put this in one of the other family accounts. Corbus Pharmaceuticals. Here's a flagpole. Here's a flag waving in the wind. Where would you buy this? I'd set a line right there, crosses over, and then you buy. No guarantees about anything, but it was up 13% on Friday. So let's continue. We looked at PAVE. We got a big gap up and raise on the semiconductors. I think everything went up. Look at that move in Broadcom. Probably sold too early. But NVIDIA up 4%. Breaking out of this little consolidation here. I put on another trade right over here and got a strong move up on Indy, up 10% for the day. Another one that we're just kind of looking at, looks like it broke out of a consolidation here on Friday, up 2%. So let's look at the airlines. Pretty flat on the airlines. Metals and mining should be up. They are. Looks like they're breaking out up to the 20-day moving average. And the home builders, Lennar, looks like it's breaking out. And this little home builder only had 100 shares. I bought them right in this area where this line is. And it just keeps coming, moving back. It looks like the 10-day moving average is just holding along that 10-day moving average and just moving on up. And then look at the volume increase over here. Some big buyers coming in. I'm sure the bond yield dropping had a lot to do with that, up over 8% on Friday. And then let's take a look at our FANG U, triple hedged FANG index. It's up about 6.05. One of the semiconductors, we did a 2-minute video last week. So AMD said it was trading in this box formation that Nicholas Darvis in the 1950s turned $500 into $2 million. And he would buy every time it popped out of the box. So we did have, we bought, I'm not sure if it was here, but we did have one call option. In family accounts, we had like 10. And so they had a nice move. And then I added over here, on this day, had 185 to 190. I've rolled it up to 190, 195, and now I'm going to have to, I'm not sure if I took off the shorts or not, but I'm going to have to definitely look at that on Monday. And then want to show an ascending base. We got Qualcomm. What is an ascending base, you may ask? Great question. So it breaks out of the base and it moves up. And then it has this flat area. And then here's another breakout. So let's just draw these. Here's the first breakout. So I guess we could call this the first base. This isn't really a second base because it wasn't really deep enough. Call it a consolidation. It's just kind of resting there and it just moves up. Here's another base, I would guess you would call. I'm not sure if it was enough weeks to be a full base. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's 2 weeks. It's really not enough. You could possibly call it 3 weeks, but it definitely needs to be at least 4 weeks. So it's not another base, but it breaks out of this, pulls back. You could call this a base on base formation, but this is basically what an ascending base is. It just keeps on ascending. And it rolls up and rolls higher. And it definitely cleared this consolidation here. I guess you could call this, yeah, this is a base on base. So it just moved higher and broke out, definitely up 3.36%. And we have some call options on this as well. We put on right in this area. So that's that. But we've looked at all that information. Let's go to the news, see what was happening. World news, China official PMI producer showed mixed data. Manufacturing moved deeper into contraction at 49.1, estimate as 49. The fifth consecutive contraction. Non-manufacturing fared slightly better, rising to 51.4. Japan's manufacturing PMI saw a further decline in February, falling to 47.2 from 48 in January. On to consumer news. Fisker, definitely in trouble. They're trying to, heard they're in talks with some people in Detroit. Quarter four EPS, $1.23 versus estimate of 27 cents. Both of those were losses, and that's why you see a 33% dive. You don't like to see that too much. Preliminary revenues was 200.1 million versus estimate of 310.79 million. Huge loss. Working on capital requirements to decrease during 2024 and enters its second year of ocean production, but business plans is highly dependent on successful transition to a new dealer partner model. So we'll see if they can get any traction in Detroit. Green Brick Partners, quarter four EPS $1.58 versus estimate $1.77. In real estate, yes, this is not what you like to see. Big gap down. It did fight back at the end to get near their 20-day moving average, down 6.65%. Sweet Green, recent IPO, quarter four adjusted EBITDA, a loss of 1.8 million versus estimate of 4.255 million. And yes, we got a massive gap up 28%. Look at that. Look at the volume on this. Does this give you any hint of what's coming? So that's where you look. Exponential Fitness, Q4 adjusted EPS 8 cents versus estimate of 15 cents. You would think it would sell off, but no, it didn't. They must have been expecting worse. Earnings surprise of negative, almost 56% to the negative. Keurig Dr. Pepper, 87 million share block trade, price at $29.10. Keeps moving on lower. Down 2.11 cents. On to Energy, Industrials and Materials, API Group, 10.6 million secondary, priced at $34.25. And that is amazing. Earnings were up 22%, so I guess they'll forgive that. Usually a secondary sends the stock down. Archer Daniels Midland files for non-timely 10-quarter filing, as it currently expects to file the annual report by March 15th, 2024. And their stock is up 2%. EPS due in one day, but it's not going to happen, I don't believe, because what I just read to you. MTZ Q4 revenues rose 9% year over year to 3.28 billion versus 3.26 billion. Beats, and so earnings declined 36% year over year quarter, but it got a gap up 12.44%. Onto Tidewater. Big move in Tidewater. 133% earnings increase. Q3 EPS 70 cents versus estimate of 79 cents. And they must have adjusted something, because that is not a beat. So on to financials. Axis Financials files mixed security shelf, and yes, they gapped down, and they fight back to try to get back to where they were, up 2.67%. B. Riley cut its dividend 50% to 50 cents per share, launched a review of strategic options for appraisals. Gapped down and fought back to get close to where they were the day before. Stock is off 8% for the day. CubeSmart, Q4 AFFO a share, 70 cents versus 68 cents. Initially sold off and fought back hard to get close to off only 0.02%. New York Community Bank. I shudder to even look at this one. Look at this huge gap down, and it continues down every day, and it's now down another 26%. Appointed Alessandro Danello as president and CEO after Thomas Cangemi notified the company of resignation as the president and CEO on 2/23. Said identified material weaknesses in the company's internal controls related to internal loan review. P10, Q4 adjusted EPS 21 cents, in line with consensus, as revenues rose 8% year over year. People were expecting much more from this company. Big gap down, fought back to just go down 10% for the day. On to Vera Mobility. Q4 adjusted EPS 24 cents versus 26 cents. It missed, sold off, and we got a huge rally in those shares. Look at that, up 5.83%. But what is the total move of that? That's got to be over 10%. That is ginormous. So the guidance, I'm not sure if the guidance turned them around or what it was, but that is definitely amazing. Celdex, 8.52 share secondary, price at $47. Initially sold off and then roared back to life with a nearly 8% gain. Humasite, 13.4 share spot secondary, priced at $3. Huge gap down. You're selling at over $4. Why would you set a secondary at $3? That's my big question. It's down nearly 26%. Tarsus Pharmaceuticals, $2.8 million spot secondary, priced at $32. Initially sold off, and it bounced off the 10-day moving average to fight back to get close to where it was. The Cooper companies, not Mr. Cooper, but the Cooper companies, I believe, contact lenses. So they gapping up. Quarter one EPS 85 cents versus 78 cents. Big beat. Up, earnings up 16% year over year quarter. PTC Therapeutics quarter four EPS loss 155.8 million, and quarter revenues 307.1 million versus estimate of 321.29 million. Big move up over 13%. Has a treatment of PKU in March 2024 and expects to submit to an NDA to the FDA for sepiapterin no later than the third quarter of 2024. Viva Systems. Yeah, we used to own this one. I believe we bought it at 28. Big sell-off here. Looks like we got a big cup formation here. Quarter four EPS $1.38 versus $1.30. People wanted more, and don't they always? Up 20% EPS. We'll just have to see if this recovers. Zynex. Excuse me. Quarter four EPS 4 cents versus estimate of 17 cents, and it dives. Big miss there, down 9.29%. And look at this massive volume. Earnings are down 80%. On to technology, media, and telecom. Apple downgraded to neutral from buy at Goldman Sachs. Can't remember if I said this, but we had calls that we shorted a call at 195 and 190. And then we put on a put spread from 180 to 175. This is definitely in a bearish formation. So we'll continue to watch that. Google is in a little bit similar formation. So we'll see a bearish put spread might be in the cards for Google as well. Arlo Technologies quarter four adjusted EPS 11 cents versus estimate 8 cents. I don't know if I said this at the top, but Mornings with Michael. For information and educational purposes only, you need to do your own due diligence before placing a trade based on any education that we give you here, education or information. Arlo, quarter four adjusted EPS 11 cents versus estimate 8 cents. ARR 210 million versus with revenues of 135.09 million versus estimate of 134.59 million. Got a big jump here, but look at this. Look at all these footprints. This should have given you a sign if you're watching it. And earnings are up 375%. Onto Autodesk, another California company in Marin County. Quarter four adjusted EPS $2.09 versus $1.95. Moved up marginally. Initially broke out of this consolidation and then pulled back a little. Had a little information here about that they were going to move up, and they did on pretty good volume. Dell, just amazing. We got a beat here. Quarter four adjusted EPS $2.20 versus estimate $1.73, a massive beat. And yes, we will fly off into the atmosphere with that type of beat. 22% earnings increase. But look at this, all these blue bars alerting you that somebody knows something. Elastic. We kind of got burned on Elastic a little bit. Had a big run up. They had a pretty good quarter, but their earnings were up 112%. I think it's going to come back. We'll just have to wait and see. I put on a couple of spread trades here. We'll see if pay off. And we'll keep hoping Elastic gets some tight spandex to tighten up here a little bit. HPE, Hewlett Packard Enterprises, quarter one adjusted EPS 48 cents versus mentioned on big computer. They were mentioned with Ionic. On quantum computing. My screen shut down here. I just got a few more. Let's see. Quantum, let's see. Here's quantum computing. They're mentioned with quantum computing as well. Looks like they're in a tight range here. It's definitely a penny stock. So not sure how that will go, but it's worth keeping on your watch list. Navitas Semiconductor, quarter four adjusted operating income, a $9.7 million loss versus estimate of 10.31. Tried to move up and then sold off. Pretty hard there. Somebody was expecting some pretty good news. This is the one time that if you had this, probably should have sold up here. Don't know what else to tell you there. Sometimes some of these things just don't work out. NetApp, big gap up, closed on it slow. Earnings up 42%. Quarter three adjusted EPS $1.94 versus $1.69. On to SoundHound. This is one issue that we had. We got the 10 options at $3.50. We sold half of it for 336% return at $7.40, and the other half we sold at $6. So not a bad return. Quarter four adjusted EBITDA, $3.7 million loss versus estimate of $500,000 loss. On revenues of 17.1 million versus estimate of 17.75. Yeah, they missed it, so this is why the big sell-off. But it isn't in the now; it's in the future. Zscaler, much like Elastic, kind of surprised us, but we did put on a couple of options on this pullback here. We'll just kind of think might be a good opportunity to buy. We'll just have to see. Earnings are up 105%. Wasn't a bad quarter, but earnings came in at 76 cents versus 58-cent estimate. See, it's not a bad quarter. So we'll just keep an eye on it. CCC Intelligent Solutions, $43 million spot secondary priced at $11.42. And they initially sold off and then they bounced off of their 10-day moving average. So that's a look there. We're going to go through and just take a look at some of the earnings winners, if we can share a little education, what led us to that. So we are looking at this Duolingo. Looks like a double bottom. Pull back right here. And this pocket pivot. This is what we decided to put this one on. And continued up here. Look at all this volume. And then it took off, gapped up. Still like Duolingo here. Frog. Recent IPO. We love recent IPOs. Came out in 2020. Broke out here. We had options on this one, and then just took off at 28%. We sold when it broke this. Remember, and we suggest that if things don't hold a gap up, we sell. We did sell, but when it got right up here, we decided to go back in, and we actually bought the shares on this one. And trade desk. I like this movement right over here. Got a little pocket pivot right here. Pull back, continues up, and then it just takes off. And we did sell this. We had these options, but we decided to sell these when it broke below the gap up. Rules are rules. And let me see if I can bring up our account here. See. So here's another Netflix. What did we like about Netflix? We pull back to the 20-day moving average, got support. This is like a pocket pivot over here. This is why we bought Netflix right before earnings, and it paid off. And then we actually sold some over here, and then right over here we added again. This seems like a pocket pivot, so we're just gonna kind of hold right there. So Monday, Israeli software company, bouncing kind of around right on this day. Thought this was a pocket pivot right over here. That's where we got in, and it just continues kind of paying dividends there. Tesla popped up. Not sure if this day. Yeah, it was this. I believe it was this day at 183. Popped up to 184. Put it on. Put on the 190-200 spread. Came up over here. Went across 200. We rolled over half of the spread to 200, 210, and the other one we took off the shorts. So we still have an option at 190 in case we want to move that into shares. And right now it's doing nothing wrong. Popped up over here, pulled back a little bit to the 10-day moving average, bounced up, and it's just riding this 10-day moving average as it moves up here. App. Really liked the app. I've been watching it. I looked at Appfolio. Did well. I was just watching app over here, and I put it on at 45. Pulled back over here. I just decided to keep it on. Broke up here. Pulled back. I just had a good, strong feeling. I saw all these blue bars in here, and held on to it. Pulled up here, and it got stronger as it went towards earnings. That gave me extra strength, and then it just gapped up here, and it's had the options, and 4 of them converted into shares, and it is just keeping us happy. Moving on. We looked at AMD, Cava. Long story about Cava. We talked about on the IPO, on the IPO base, how kind of we're correct there. And then said when it pulled back to 52, it would fault, would fail, and it did, went down to 29. And then right around this area, watch it bounce between 29 and 30, went up to 31, decided to buy. I believe we bought at 32. And watch it pull back a little bit here, but just decided to hang on. This is the little double bottom here. Came up over here on this pullback about another company doing solid drive-through service. So we had 1,000 shares. We added 600 more and bounced here, continued higher. Had a little bit of a pullback to the 20-day moving average. We could have bought some more, chose not to. This sell-off just gave us a little nervous over here. So over here, when it popped up, we sold the 600 shares. And then it pulled back here. We sold in the middle of this range, the rest of them. And it pulled back, and we are watching it pretty closely. So we put it on at options at 46, 10 of them, and we bought 500 shares. And I believe right over here, we sold everything, pulled back. And then right over here, we bought 15 call options at 49. And we're pretty happy as earnings came out, and it's continuing higher. So we plan to exercise those earnings, those call options as things move along. So that's Cava and SMCI. They kind of sold, got a little nervous over here. And we sold, and then of course next day or news came out that they're going to have great earnings, and so we bought 6 shares after hours at 3:30. Kind of moved up here, so we sold them at 55%, 60% gain right in here. I wish we had held them. Kept watching all of this move on. Pulled back. I believe it pulled back to like 650. One of these days. But anyway, it popped, was moving back up. We bought it at 725, the option. And now they've just been added to the S&P 500. So they bounce about 12 to 14% after hours, and we'll see where they are tomorrow. On to cellulose. We like this move right here. This looks like a pocket pivot to us. But I'm not sure if we put it on here or here. Yeah, it was this day, so we put it on at 57.61. And when it got up to 61, we rolled half of them to 61.67 and kept the other, pulled off the other shorts. And we have gotten half of those into shares now at 400 shares, the ones that we've put on at 57. So we're happy with Celsius. It was a big leader, months to a year ago, and we just felt like this is a big kind of cup formation and that it would continue upwards, and it has. We shown before how we manage ELF and Meta, but let's take a look at, I believe we've taken a look at MicroStrategies before as well, but we'll just kind of revisit this. Did a lot of reading, and MicroStrategies was purported to be selling at a 30% discount when it was at 580, I believe. We bought over here at 483, moved up to 525 right over here, and pulled back to 500. So we got out. We really wanted to get back in, so we're watching it. Right before earnings, we bought 2 options at 495 and 10 shares at 493. 2 days later, really popped. We actually, very next day, we had to close the spread option we had. And retrospect, I wish I would have just taken off the short on that one, and we could add a 200 shares, but we're holding on to those shares. This is a cup and a handle. So you could have, as it moved across the 10-day moving average on pretty good volume, could have added here, and it is just continuing up. It's up to like 1106 right now. We'll take a look here, see what kind of return that is. Right now it's 116%. So that is the story with that. And quickly we'll take a look at Meta. Meta continues pretty strong. It's clearing some consolidation right here, moving up. It's over the $500 area. Jesse Livermore always said when it goes over 300, 200, 400, 500, probably would buy some more. So we'll just have to see if we add any more shares on Monday. And ELF just is amazing. It is almost 100 points higher than when we bought it over on what we like to call a VCP, volatility contraction pattern. Really tight, kind of closes right in here. Put on the $120 $420 options, and boom, it just gaps up to 2 days later. So that is ELF, kind of retracted here. We could have added at the 20-day moving average. No, I'm sorry, we did not buy over here. We bought over here in this VCP area. Moved up, moved up, moved up. Had a pullback to the 20-day moving average. This would have been a nice place to add as it moved up. Decided not to. Moved up to 164. Pulled back here. I put on 2 options at 160. And then pulled back even more. I added 2 more at 155 for a week earlier than week or two earlier than this. So when it got over here around 160 again, those 2 exercise. I have 600 shares. And then right before earnings, it went up to 174. So I decided to close the 2 $160 options for a $4,000 profit. And then on earnings, got a little excited. I added 100 shares at 167 after hours, and another 50 at 174. Then we had a downdraft here, so I got rid of the 174s, kept the 167, and then we sold 100 shares right over here just to sell into the rally, take some profit, and we have 600 shares now. And then we did sell some calls at 240. So to try to get a little dividend out of Elf Beauty, we try to do this every now and then, get a little more earnings moving forward, selling covered calls on stock that we already own. So that's our report for today, the weekend update. Hope everybody is having a great day, great weekend, and we'll see you tomorrow on Mornings with Michael. Remember, Mornings with Michael is for information and educational purposes only. It's your responsibility to do your own due diligence. We help you with ideas, and if we can ever help you with answer any questions, feel free to give us a comment, and we'll be sure to reach out to you. You have a great day, and we'll see you tomorrow.